Pick up on the markets now, and world market activity expected to continue seeing positive sentiment as investors welcome the further easing of COVID-19 regulations in China. On the local front, the JSE is anticipating to follow its global peers by awaiting the latest GDP numbers. And let's speak now to Just One Lab founder Simon Brown, who's going to explain all of the activity that's happening at the JSE in early trade. Simon, a very good morning to you. Let's start with the expected activity, at least domestically and, of course, the global markets today, as the positive sentiment remains over the developments in China, those lockdowns.
Good morning. I think you're 100% right. The China lockdown is weighing on markets because, of course, China is not only a giant consumer of goods, they're a giant producer of goods at the same time. And that's just sort of been creating uncertainty. The sort of easing of that, we also had an OPEC Plus meeting on Sunday. They didn't change production, so that gives some hope that we can see oil perhaps even drifting a little bit lower. As we're trading this morning, we're slightly in the green. The top 40 is up 0.2%. We've got industrials up a third. Financials, banks, which had really hard hit last week on the Pala news, they're up 0.2%. And it's really only resources where we're seeing a little bit of weakness as they're down a little under 0.5%. And the commodities themselves are actually picking up, but resources have had a good run. And, of course, we're seeing some currency strength.
Yeah, let's focus the attention on the domestic front for a moment, Simon, and tell us what the market expectations are of these GDP figures that are going to be announced later today by States SA.
Yeah, so expectation for the year-on-year number is 2.8%. That's actually not a bad number. I mean, we would like a lot more. But, you know, for the previous set of results 3 months ago, year-on-year was 0.7. So 2.8 is a decent number. And it shows that actually, we, as an economy, we've perhaps been doing better than it feels, particularly in light of the load shedding. The quarter-on-quarter is an important one because, of course, 2 negative quarters means technical recession, and the second quarter of this year was a negative number. But that was impacted by the floods down in KZN back in April. Expectation is for a plus 0.7% quarter-on-quarter. So actually some optimism there, some decent, not knock it out the park, but decent GDP numbers expected.
You've already touched on this, and it's the performance of the rand and how it's likely to fare. A slight recovery from the major losses that we saw due to the political uncertainty. And here's a simple question, Simon. Are we going to see more turbulence, or is it likely to stabilize?
I think it's going to stabilize. When we chatted last Thursday, just after the Pala report was out, I said it's the canary in the mine. We did see a lot of currency, a lot of volatility, a lot of weakness in the rand. It is coming back, trading around 17.36 against the dollar. And I think we're seeing a bit of strength in the US dollar the past 2 days. But I think we can probably actually expect to see some smoother moving from the currency. And I think we can expect to see perhaps some strength over the days and weeks ahead. All bets are off, of course, if political things change. We'll go back to the volatility. But for now, currency traders seem to be comfortable again, whereas Thursday, Friday last week, they were, frankly, quite stressed.
Let's talk company news. Signia seeing a surge after reporting a spike in dividends. Take us through those developments. How's this company performing?
That was a really good set of numbers from Signia. And I suppose we should put it into 2 parts. And the one part is earnings and profit. They were up nicely. The dividend was up very aggressively. We're now seeing a dividend yield of little over 10%. We've got a forward price earnings of a little under 10 times. And if you compare it to Alexander Forbes, which also had results yesterday, not exactly the same business, but they both do asset management. They both do pension schemes and the like. Alexander Forbes really struggling in an economy which isn't showing massive growth. Signia, on the other hand, doing really, really well. And I thought a really good set of numbers coming out of them. Shares almost back at all-time highs. So investors who've held through the last 3 or 4 years of what's been a fairly tough period for the stock, been well rewarded.
Yeah, let's conclude the conversation with Teresa, also posting their annual results. They seem to suggest that profits are up 7%. How are their numbers looking?
The numbers were also really good. PGMs, platinum group metals, the prices have come down a bit, but then over the past year, we've seen the rand a little weaker, so that didn't take too much shine off it. They've also got chrome production from their Vulcan plant in the Rustenburg area. That's doing quite well. Chrome prices are quite elevated at this point in time, and they're starting on their Grand Dyke expansion in Zimbabwe. It's a greenfield project. It will be up middle of 2024. That should in time double their production. At the moment, they do about 180,000 ounces a year, which makes them a small PGM miner. But when you double that to 360,000, they're starting to get quite serious. Again, a really good set of numbers in what's been a tough space. PGM prices under pressure, load shedding hurts, but they've really come through. And I thought another strong set of numbers from the company.
Just One Lab founder Simon Brown, thank you very much for that markets update.